Welcome to 30 Minutes of Awesome. So we got a about a minute and a half for the top of the hour. Just want to welcome everybody. If you're brand new to this live stream, the 30 Minutes of Awesome live stream, go ahead and give me a shout out in the chat. Let me know you're brand new. I know lots of people. This is like I don't know. I've been doing this for a year and a half every single week. Haven't missed one, so I don't even know how many we're up to now. At least, I'd say 70, if not 80 of these in a row. Welcome, welcome, welcome. Glad to have you here. And we'll get started here in just a moment at the top of the hour. Letting everybody get here, get logged in, start the stream up. So don't be shy, chat with me in the stream. So I got the live chat going. And if you're having trouble, check it out on a browser, on a computer. I know the live chat works. Works on my phone, works on desktop, works on this app I use to stream. So if you're having trouble, the only people I've heard from that have trouble seem to be iPhone users. So I don't know. Apple anti-Microsoft, or anti-Google, anti-Microsoft. I don't know. I saw Tara there with the Microsoft. Got me sidetracked. Anyway. All right. It works. Yeah, it works. I mean, Kimberly's chatting. My lovely bride, Kimberly. Glad to see you in the chat. All right. How's everybody doing? One word summary for the day. Go. Put it in the chat. Let me know. What would your one word summary for today be? If you're in Discord, you already know my one word summary. More than likely. It might be the summary for the week, too. Anybody? My one word summary would be meh. Just a meh kind of day. A little bit of up, a little bit down. Just a meh. Not really compelling either direction. Yeah, meh. Sideways. That's right. Yeah, just a meh kind of day. Might be a meh kind of week, being the last week of the quarter. And we're going to talk about what's on tap up there. Seasonality. We'll talk about what that means. We're going to talk about some interest rate stuff. What I see in the rates. So I found a couple other articles I want to show you. And as always, we will take 30 minutes of your requests. I'll cover them. I'll try to stay until every chart's gotten. Can't guarantee as we get more and more people on these streams. It got a little cooler here in town here. I've been in this hoodie all day. I generally stay in a hoodie from about late October, early November through April here in warm Tennessee, kind of cool Tennessee for that few months. But anyway, I thought I was going to lose it here Monday. We had the 80s or whatever, but today back in the 50s. It's like a freeze warning tomorrow. I don't know, whatever. Freaking weather. Anyway, this is the Bassmaster tournament over there, I guess. Over there. Bassmaster tournament wrapped up last night. Crazy thing happening, I guess, with basketball Final Four stuff not happening here, and the fall's getting out. Like, we could have the Bassmaster tournament. Anyway, they were fishing on the lakes here and wrapped up last night with the big winner. I don't even know his name, but that is the Thompson Bowling Arena where the UT Knoxville Vols play basketball and the Lady Vols play basketball right there. So, yeah, I kind of talked about that this morning. SVB mostly getting bought out by First Citizens Bank of North Carolina. I'm trying to remember the story this morning I was talking about. So, not a whole lot left there. Not a whole lot meat left on the bone. FDIC taking a $20 billion hit. I guess before we jump into anything else, all trading involves substantial risk of loss. Past performance not necessarily indicative of future results. Just because I predicted stuff in the past might mean I'm full of crap in the future. Keep it in mind, this presentation here, informational, educational, and fun, is not a recommendation to buy or sell any financial instrument. If you desire that personal financial advice, you need to hire and consult a financial advisor that has your best interest in mind. I'm just here to entertain and hang out with you. Maybe we make a little money together, maybe not. I don't know. Like I said, I could be completely full of crap. Anyway, let's talk about some stuff I brought today. Pop it over here. Generative AI set to affect 300 million jobs across major economies. That's like more jobs than we have in the United States right there. They're saying that technology could boost global GDP by 7%, but it also creates significant risk and risks of significant disruption. Excuse me, getting tongue-tied here. To all sorts of things. And if I don't know, I'm a pretty good proponent of the different aspects of this. I mean, I've been using it. I've been using it to make my thumbnails. I've been using it for some of the copy that I've been trying to generate. And I don't know, it's very beneficial. It helps me do a lot of stuff that I didn't have time or money to hire other people to help me with. So, yeah, nobody wants to go back to the office, but it's also the generative AI stuff. Let's look at this real quick. I mean, everybody's on my YouTube channel, so you know what I'm talking about, maybe. But if you haven't, check these out right here on the these thumbnails. These are all, well, virtually all. Today's is not AI, but all the Morning Monster thumbnails are all generative AI generated thumbnails. This one was me doing some Photoshop work, but in general, even this guy right here was the guy with the blue eyes was a generative AI, and I put the monster cans in the background. So the 30 minutes awesome are actually photos, and then all those other crazy looking ones are all generative AI. Some of them are Dolly too. The majority of the recent ones are all from Midjourney. Yeah, this guy was Midjourney. I did Photoshop it a little bit. This was Midjourney, the one for this morning. I've got a Midjourney one I pumped out for tomorrow. So we'll see what I post here after we get done with 30 minutes of awesome. So it does help. I'm able to make art that I couldn't have made myself. And there's people that are using the Chat GPT-4, like the subscription GPT thing, GPT Plus, whatever, this runs on GPT-4 for doing business experiments, like telling it to run a business for them, and they'll update it with how much money they're making, starting websites and sales and all sorts of stuff. So it's kind of interesting, and where this stuff's going. Now, the way I'm playing it right now, investing in the companies that make the shovels. Who makes the shovels right now? GPU companies. All this stuff runs on expensive GPUs, and thousands of them. The GPT-1 was allegedly trained on 10,000 NVIDIA GPUs. I don't know if that's accurate or if that was 10,000 GPU hours, but I mean, NVIDIA obviously been taking off with this whole AI thing. We'll talk about that more in the charts as we get there. So close a couple of these tabs out so I don't circle back. Now, seasonality. Let's circle into this. So seasonality. We are approaching the end of March, into the Q1. Right? Q1 generally kind of choppy on Nasdaq. This is the last 20 years of Nasdaq, all the way through 2022. We're kind of coming into this pullback right at the end of the month. That's pretty typical for Nasdaq. If we zoom it up a little bit, you can see a little pullback, and then we tend to launch right into April, and a little bit of chop, but mostly up. One of the biggest solid up months of the year, if you look at it. Nice solid up month. I mean, May typically get a nice pullback and end higher. June, a lot of chop. August tends to be a strong month. I mean, July tends to be a strong month. August, dip, flat. September, kind of flat and then pop, and then right back flat. October, maybe a drift higher, but with some volatility. So, I mean, April tends to be one of the solid performers of the year out of all the months. April and July for tech. This is Nasdaq, big tech. Now, looking at S&P 500, I'll zoom this up a little bit more. We see the same little bit of volatility and sideways chop, and then April, again, a pretty solid performer. May, selling May, go away. June, even July is not that great, typically, on S&P 500. This happens to be one of the best months of the year for S&P 500. And this, again, summed up through 2022 20-year range. All right. So this is just taking every year, taking the days, adding them up. What's the net change of that day? April tends to be a nice up. Now, the scale on these two charts is not the same. And this scale does go up to about 14% for the year, all the way back here, whereas we typically only see about 9% for the year on the S&P. So we're looking for about, could see upwards of a 2% pop on S&P 500 seasonality-wise for April. And looking back at Nasdaq, we could see roughly a little over 2% on Nasdaq right there. All right. Now the other cat in the woodpile, sneaking around, chasing lizards, VIX. We saw VIX kind of pop into mid-March. Historically, we start a large pullback into the end of April and then chop a little bit in May, make an ultimate low late May, and then that tends to be beyond the early January low. That tends to be the low of the year, and we end up going a little higher on VIX for the rest of the year. All right. So I have a short VIX position on out to June. I will probably look to be closing profits either late April or into May, depending on what happens here. So that's how do I play short VIX? SVXY along on that one would be. Yeah, I did accept my invitation to try Google Bard, and it kind of hedges what it says a lot compared to GPT. So haven't been overly impressed with the responses I got from Bard. I kind of wished Google would have just let us play with the one that the Wired article was about last summer, where the engineer thought it had become sentient and basically lost his job for saying that publicly, and got put on permanent leave, I guess, permanent paid leave. So if you're not familiar with what I'm talking about, let's see, Google AI sentient, yeah, right here. It was in Scientific American. I mean, you can go read the article if you want to. It's kind of, it's a fascinating thing. There was a Wired article that went with it, and there you go, right there in the chat. If you want to go pop that up and look at it later. It's, yeah, he kind of summed it up like, I think it was a 7 or 8 year old kid that happens to know a lot about physics. I mean, it's kind of funny when you think about it. Yeah. But they basically fed this thing all of the internet. I mean, Google is the indexer of the internet, right? They kind of fed it all of the internet and trained it up. But as they released it as Bard, they kind of put it on some guide rails and keep it from being, the best I can say, it hedges what it says a lot, and then all of them will give you factually incorrect information. So got to be careful. You always got to fact check these things. There's no, I mean, it'll lie to you. And I've had GPT give me wrong code, but in general, it's easily fixable. Like it's actually coded up an indicator for me that I've been working on. It'll be rolling out later in the summer, probably as a Discord bot upgrade, and give us some live alerts. It's something just I'm working on in the background, coding it up. It wrote a lot of Python code for me, or helped me write Python code, converting it from some other indicators I had, and converting it to Python that I could pull. And it even told me how to pull the data in a more efficient way from Alpaca. So these things are wildly helpful. I can't even tell you. So YouTubers give you factually incorrect information also. It's you got to be careful who you're listening to. So anyway, let's jump into actual charts. These are snapshots I took right before I got on. Getting a little reversal into the late day here. Did make a lower low than we saw earlier last week. So this thing just kind of been drifting sideways. Really, if you bring this over, we haven't gone anywhere for almost 2 weeks. ish. I mean, God, that's a lot of consolidation. Volatility on the FOMC last week, and then just a drift off, and hadn't really gone anywhere. So same sort of thing. We had an uptrend channel going on ES, which is the S&P 500's futures. If you're unfamiliar with NQ, that's Nasdaq's futures. ES is S&P 500's futures. We were in an uptrend channel. We tried to break out to the top. We tried to break out to the bottom. That was the FOMC. This is the reaction afterwards. And on Monday morning at the open, or at the morning monster, I said we were likely to hit this blue line, which is the weekly pivot. We came down and hit that today. Now we can rally off. The purple up here is the monthly pivot. You can see we come to the end of the month, here at the end of the week. So we've just got a little bit of time to try to push higher. Staying in the uptrend channel so far. S&P 500, looking at the 3-day chart, just consolidating in this kind of watermelon seed squeeze flag thing. I don't know if you want to call it a bull flag, bear flag, wedge, triangle, reverse twist, cannonball. I don't know. What I see is it's consolidating below the resistance that is the roadmap line that I'm always talking about every single week. That dashed white line there is the roadmap line on this chart. This purple line is the downtrend of highs that was all of 2022. We're stuck right here in between those two things, consolidating. All these EMAs coming together, just hanging out. We need to break out of here. It's like an inside candle, inside candle, inside candle, inside candle. I mean, it's like, these are 3-day candles too. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days of like inside candles being inside the day before. Craziness. And it's all kind of inside this giant candle right back here. Not going anywhere. Now, interest rates. One of the interesting things we sent out on email right here. Normally the Fed cuts soon after the 3-month, 30-year curve starts to steepen. So we saw a bottom in that a couple weeks back, right after the SVB blow up. And this gold chart is kind of the history summation. You know, typically when this one ticks to the left here, as time goes on and we get more data. So as that lines up with 6 weeks out, the Fed typically starts cutting rates. 6 to 8 weeks roughly. That's the average. So we could be a few weeks out, 4 to 6 weeks out from the first rate cut. So, all right, and then going back and grabbing the other chart, this one right here, zoom it up for you. The Fed has normally cut rates about 6 months after CPI peaks. So historical in gold again, and we kind of peaked out, and usually we see rates start cutting it by now. And you could say, not quite there. This thing could tick off a few more weeks before we hit that, and we could be over here when we actually see a rate cut. So this is our current CPI in black as we roll along here. Interesting stuff. Anyway, that's the interest rates, and let's pop over and actually talk about DGS2. 2-year constant treasury rate plummeting even further. The target rate up here now was here. Now we're up here with the rate raise from the FOMC. If we hop onto the daily, we can see there's been a little bit of chop on that 2-year treasury, but still hanging out down here at 3.75. That is a full point below the bottom of the Fed's target rate. If we see this erode further, it increases the likelihood we see a cut in the rate at the next FOMC meeting. All right. So interesting that the interest rates are telling us that we may see a cut before long. I don't think they're going to be able to maintain higher for longer, at least right now. Now, I did speculate back in January that we may see a pause in the 2-year treasury rate, which we're kind of hanging out where I drew this line, and I thought we might see the Fed rate above the treasury rate and see them kind of go sideways, which, they did raise just slightly. But we could see that hold for a little while, possibly the rest of the year, and then the rates take off again. So we'll have to see how this actually plays out. We could go through a period of sideways before we actually have to start raising rates again. Interesting. Anyway, moving on. This S&P 500 chart, of course, just hanging out in the middle. We have gone nowhere for 2 full years. Come back over here, right to the price. That is March 11th, 2021, right over there. And now here we are at March 28th, 2023, sideways despite taking a diversion up and all the way back down and just kind of hanging out here. So if you've had a hard time making money, maybe it's not your fault. The whole time I've been doing this stuff, you know, I did launch doing this guru stock teaching stuff back in 2021. So I've been blessed with having a sideways market that entire time. How lucky for me. Anyway, challenging environment. So popping over, grab the red list. We usually hit a few high points here. SPXY was the one I was talking about. Kind of have a target up here around 66 and maybe an extension out to 70 or even 72. If that's something you were interested in, that's what I was talking about there. Moving on down, looking at the actual live charts, we're just kind of stuck in this range in ES right here, S&P 500 futures, right on the roadmap line, needing to break out. NQ, stuck consolidating higher, right under the resistance that was from the August highs, and back here a year ago where we were consolidating in March, we're stuck right under that range. Russell, stuck consolidating down here at the lows. Now, Russell breaking out can indicate this thing's ready to go. Nasdaq pulling back a little bit, seasonality wise, that's expected, and then probably a rip. And I already had that drawn on the chart, coincidentally. Oil right here, working on actually breaking out. That was another one that I wanted to touch on briefly before we roll into everything else. Oil right here. Check this out. So this is based on CTAs. That's computerized trading algorithms, not commodities trading advisors. So based on this, we could see a squeeze in oil. If we start moving up big, now up small, we could still see a somewhat outsized move in oil. If we start going down big, the CTAs are kind of gonna be flat a little bit, and flat market CTAs are just kind of flat. So there's no big selling programmed into the CTAs. And actually, if we start getting a big move up, they are caught short, similar to the way they were caught short in December, and we saw a big pop in the S&P 500 and the Nasdaq. We could see a big pop in oil. Now, what is my preferred way to play that? It would be with UCO. And right here, UCO. This is a leveraged long oil. It is beat down, coming off of the lowest low it's been since back here in 21. So lower than all of 22. Coming up off of that, if we could see this break out just a little bit, I'm going to be bullish on UCO. We did have a split right back here. We did a 4-for-1 split. So this reduced the prices that we saw. We saw prices up to 210, I think it was, at that peak back in March of last year. And we can see this thing rally again strongly. So that's my preferred way to play. All right, looking at gasoline. Attempting to break out here. Even though oil is still hanging out down there at its lows, gasoline bottomed back in December and indicating that we may see a rally. A breakout above about 280 can lead us to a fairly sizable pop here. This looks like a 1-2-1-2 type setup, and that can lead to a strong move up. What kind of strong move up? Well, we could see a move up to back around 340. Then you have to add the 80 cents or dollar or whatever of federal taxes to that. So that's back to 440 a gallon gasoline. Yikes, right? Anyway, will I ever see a bull market before you die? I don't know. Hang in here. We'll try to get a bull market going. We're working on it. Natural gas seems to be breaking down, probably on its way to at least $1.75, if not $1.50 area. Not looking strong right now. Just not looking good on natural gas. Of course, if you're paying the bills for natural gas, it sure does look good, right? Gold potentially breaking out, and that's a lot of that has to do with the dollar showing some weakness. Weakness on dollar. If it breaks down below these lows around 102, probably going to see it move down into the mid 90s area down here on the dollar. That is going to be bullish for stuff like gold and copper, international metal, commodities type things. And we can see a pop on copper up in this $4.80 to $5 area up here, which would be quite bullish for something like FCX if it can finally break out, start heading higher. Or another one, potential Vale, VALE, another potential to get another run. The targets on that one probably somewhere up around 20 if it can get out of this downtrend that it's in right now. All right. Fair play on gold right now. I mean, you could go with GLD. I got out of this position. My long-term miner position is in Barrick Mining right here. I actually hold some $20 calls, I think it is. Looking for a breakout higher. And then another kind of favorite right here, NEM, but it's stuck at the roadmap line. We need it to break out higher to establish further uptrend. Now this one, if I can actually click the button here, target would be somewhere roughly 69. Pretty good upside, you know, going from 50 to 69 on NEM. That doesn't put us at a higher high at this point for NEM, so I'd be a little careful. You can always look at GDX. That one basically has a breakout setup to go to 35 or 37 right now. Put it on the lowest low, yeah. And then GDXJ for the junior miners also has potential move up to this 43 to 46 area right now. So all those still looking pretty strong. All right, let me roll up here and try to get some of the list. Take your request now, unless anybody wants to look at something else before I jump into all that. S5FI, of course, trying to work on coming off of the reversal here. This thing's storing up some energy. It can pop right back up to 80. Take all the S&P 500 stocks back above their 50-day moving average. So watch that one. All right, BITO is working on running to the target. Target hadn't moved. Just getting a little consolidation. That's all based on Bitcoin doing its head and shoulders pattern. It played out the head and shoulders. Let's see. If I switch charts, nope, wrong chart. Crypto power plays. And I have to go to this chart really quickly. There we go. So Bitcoin had a head and shoulders pattern, and I don't have it drawn properly right here. It actually came on down. It was sloppy, but it was in here. And the head played out basically the distance from the head to the neck, right here, head to the neck. We played out right at 29,000. That may have been not a classic head and shoulders. It was like a sloppy looking one, but it worked, and it played out right at 29, and we're getting that pullback. The next push out of here, though, could take us up into this 38 area right around here. So a little taste out of the crypto power plays playbook there. Roll back over here. Next up, Mara got hit on Bitcoin pulling back, but that's looks like a 1-2-1-2 type setup. Bounced right off the roadmap line. A 618 retrace there would just reinforce the potential bullish pattern that is in place. Run that up to the highs right there. Yep. It has room to go down to 660, but if we start back higher, break higher than we saw just last week, this thing's game on up to around 15 minimum and probably into this $20 area more likely. So, all right, then ETH. I have another pattern in crypto power plays for this thing to move up into this $1,900 to $2,000 area, and then pull back probably back into this same area where it consolidated for a good long bit right here. They do have a potential code change coming up, Shanghai, combined with something else. They kind of have some stupid name for it. But basically the Shanghai update allows unstaking of all the Ethereum 2.0 that got staked and the ramp up to the proof of stake conversion. It's going to add liquidity to the market, which may or may not positively improve and impact prices. It could create liquidity that causes this to drop. One thing on Bitcoin was that the U.S. government sent almost 10,000 Bitcoins to Coinbase and started liquidating them. That may have been some of the pullback we saw this week in conjunction with the SEC lawsuit. So that there's 10,000 Bitcoins that the U.S. government is trying to unload. They are one of the biggest holders of Bitcoin right now. They've confiscated over 200,000 Bitcoins from different entities, and they want to unload some of it. So be way smarter if they'd wait for higher prices that we all know are coming. But hey, since when was the government smart, right? Meta looks pretty strong, continuing to hold above what was resistance, now turned support. Long-term target up here for a gap fill, about 315. That's the gap where it gapped down over here on their bad decision to invest in Metaverse. Let's invest in that and lose $800 billion. Whatever. Anyway, CMG. Chipotle looks like a big sideways. It doesn't look like it's going anywhere for a couple years now. Just a big old box when you draw it like that. Boring. High price, but boring. Tesla bounced off the roadmap line. Could get a little bit of retrace. If you can't see it, let's zoom it up. We could see, get the right tool here. Could see a little bit deeper retrace, or it could just consolidate right here and pop. It's likely to find resistance at this black line. That black line is the downtrend of highs, similar to the downtrend of highs that we saw on the S&P 500. Trading view keeps moving around for me, but essentially right in there, and based on the current, got resistance right around 255, 260. Probably see a retrace back to the roadmap line once we get there. Something like that before we can get the energy to break through. Not unlike the S&P 500. We saw it ramp right up there, hit that line, retrace, build some energy, sat here for 2 weeks in December, and then popped and went right up through, ran out of energy, making a new higher high, and came right back to the trend line once again. That's what I would expect on Tesla, is that we come up here, test that, come down, retest the roadmap line, break up through, run out of steam at a higher high than we saw right here when we tested it, come back and retest that trend line one more time before we can finally move up out of there. It's a very classic reversal pattern out of a downtrend. Reversing out of a downtrend. All right. Moving on. Microsoft and Apple are the two big winners, representing 13% of the S&P 500 right now. Microsoft just consolidating right over here, right above this resistance, has more resistance right up there before it can break into a new uptrend. So same kind of pattern. Broke up through, came back to retest, kind of sloppy, went underneath, came back above, got a higher high, may retest again before we can finally get going. And just to fill out what I was just saying with the Apple and the Microsoft, this one holding up this above these highs really well. Tried to push lower today, closed right above. This one, like I said, when we close above these highs, we're on a path to go test 199 to 200. The fib level is 199. I think it'll be kind of a shame if it misses 199 and stops right there and misses 200, misses the 200 tag. I think we're likely to see a 200 tag before the next major pullback in Apple. Now, that may or may not actually play out, and this could take well into the end of the year before we get up that high. So know your time frame. Don't just go buy some June options and be like, Jeffrey, I thought you said it was going to 200. It's like, yeah, my time frame might be into next year before we see 200 on Apple. So just know what you're playing with here. All right. NVIDIA consolidating right here. We have one more little pop we could see before it's probably going to consolidate for a little while. Now, NVIDIA, like I said, making the shovels along with AMD, making the shovels for the AI revolution. AMD less so. You know, NVIDIA does tend to be the more popular one for GPUs, for AI research. AMD tends to make the stuff, the hardware that the AIs run on after they get them all programmed, after the research. The Tesla cars and stuff like that. You know, all your video game consoles, all that stuff, they typically go with AMD to make the processors, and then they change the AIs to run on those commodity processors produced by AMD. So if you weren't familiar, that's kind of the way the industry works. All right, moving on down. INSW. I'm behind the chat a little bit, so yeah, just consolidating. It looks like could be an echo. Setting up for push higher. It could pull down just a little bit more. We have seen some weakness in the shipping industry. My big picture target was up here around 90 on INSW. All right, LEVI getting a little pullback. Breakout above 18, can set it off for a move higher. Like, got to get above that level right there. Set on a path to get to 20 to 21. Not a huge upside. And WWE, yeah, almost to the roadmap line. Probably going to find some resistance up here around 105, 107, 110 on that next push. And it's just been doing these consistent echo type pullbacks over and over and over. Keeps extending. Likely to find some resistance here. If it doesn't, it can move on up into this 140, 150 area. All right. Briefly touched on AMD. Let's see. UNG, well, it won't go to zero probably. They'll do a reverse split before they unlist UNG. So AMD, just rehashing here. Getting a little pullback. May see a pullback as big as this one back here before the next leg higher. We did come right up into this resistance. Just scraping, couldn't poke into it. It's going to have to recharge before it can make the next attempt. And it's got that resistance built up where those two highs are from right back here in June and August of last summer. That's where the orange box comes from. I was expecting it to kind of push up to the top of the orange box about 110 before we saw the pullback into this area back into 92. Looks like we came up short. May pull back and retest that high right there before we can get the next strength to try to break on up higher. Now, my ultimate target up there about 130-ish before we see another pullback to this same area around 80 to 90 one more time. Bummer, I know, but that's the price pattern right now. Probably pull back, pull back into here and pop up here. May not get that high. Maybe a little lower. May only be at like 125-ish, depending on where this bottoms right now. All right, that's AMD. Intel is looking pretty crappy. Continuing this sideways consolidation at the bottom, and that inability to break out and make a higher high here indicates this probably is going to go down back down here and make a lower low. So be careful on that one if you're trying to chase it higher until it confirms a breakout. AAPL, that's a failure. It's probably going to go that deep back to the other side. That's a failure. The head and shoulders probably coming down back to here, back to the lows. Looked promising, but failed, and probably heading down here. So, BA. Looks like it's on a rendezvous with the roadmap line. Probably going to come touch before it can do the next move. Yeah, I guessed back all the way back over here. I drew it, and looks like it poked one more higher high, and now it's doing it. So watch for it to come bounce. If it just breaks out above 212, it's probably going to go for an extension up to about 240. Otherwise, look for it to come down and bounce, and then we can run a fib line and actually come up with a new target for BA. SCAT looking like it's consolidating. Had a measured bounce types. Not a measured bounce. What is it? Yeah. Is that right? No. Echo. It was an echo. Get my terminology all messed up. I did this on a video for somebody. Yeah. Kind of an echo. Little extension there. We break back above the roadmap line. This is game on. This is basically a roadmap line bounce potential here. This zone right here, the green zone, still the target between 270 and 290. How long that's going to take? I don't know. Could take out to the summer. Just working on a nice, slow, lumbering stock right here. Not really going anywhere in a hurry. And coin. Yeah, see, popped up here, double top kind of, and right back to the consolidation at the roadmap line. Next break up, if it can break out here, probably go into this 110 area, where it was the prior high from back here in August. If it can break out above that, target's at 150, 195, and a very lofty goal target at 275 up here, if it can really get going. Does have risk to retrace all the way back down to about 50, so be careful. Know your parameters. And Sony, didn't that used to be S&E? I'm pretty sure Sony used to be S&E. Sony Group Corporation, just kind of bouncing here. It has potential, whether it has a measured bounce potential. Doesn't seem to be taking it up on it yet to actually play out, but it has this potential to go right up here to 100 to possibly 115 if it wants to do that, but it's got to break out above that little rejection high right there it made. Got to break out above that. Above 95, we can see a move up to 115. And then we have GLD. Kind of went over that. I'm off of this already. It already hit that target, bounced down. I closed it. It has potential to get out to 190, maybe even 200, but I would be very careful expecting higher targets without a more significant retrace on GLD. And SLV on a different path. Very, very different path. Not really the roadmap type setup at all. Pushed way deeper. This has got a measured bounce potential that did a 618 retrace, and the upside off of that would be roughly, I don't even have it drawn. Let's go ahead and draw it. 25 if it's bearish, and up to 31-ish, 30, 31 if it's bullish. Just based on that potential right there. So big upside potential, and it was a measured bounce. So now the more conservative targets for measured bounce are probably like 24 and 25, and that 25 being somewhat bearish for a lower low. So just know your parameters on that one if you're trying to chase after it. AG doesn't look as awesome. That's consolidating at the lows. That would be a dangerous chart right there. I would expect it to go lower. It looks like they lose lots of money. Continue to lose money. Rough business apparently. All right, I don't know if that's HL. Helka Mining. Yeah, I mean that one does look more positive. Target at 6 and 7, basically. Not huge upside. All right, already covered Mora. ABBV. Got to break above 162 to get on the path. My target is I'm still maintaining this 188 kind of area right up here, 188, 189. Got to break above 162 to get on that path though. And then it has resistance is built up here and resistance is built up here at 175, 168, 175. So it's got lots of layers of resistance, but I still feel fairly confident we're going to see that target, and it could be out into late this year. But it can, I mean, this one can just get up and move all of a sudden. And then we take this and this move right here. If we project it off of this right here, and get right up darn close. So, all right. MRK. Just consolidating. Tap the roadmap line right there last week. Got to break out above this 112 to get up here in the 120 area. Just kind of consolidating a little bit. That one can also go on a monster run all of a sudden. I mean, look at what it did last time. It consolidated like this. Went on a nice big fat move. Can take it up to this 140 area, 130, 135, 140. And that could take out to July. So, all right. Amazon. The amazing Amazon. I was hopeful it was going to break out finally when it was getting closes in 100, above that resistance, but then it's got sucked right back down with this pullback consolidation in Nasdaq. The next breakout Nasdaq does, this one's got a huge opportunity to catch up. Prior high at 145. This target, ideal target zone up here around 150, 160. Probably pull back again, back down to the 120 area, back to this consolidation over here before it gets the bigger bounce. My position is out. I have a position out to June and July in Amazon. That's what the blue line represents. All right. UNG probably headed for a reverse split, would be my guess. Decaying asset and set up for a reverse split. Last time I did one, back here in 2018, 1 for 4. And decayed, except for the little pop, keeps decaying. I guess the leverage they play on this thing is decaying in nature. So, cost a roll. Netflix, UNG always going towards zero, basically. Looks like Netflix has a bigger potential setup here. Bouncing off the roadmap line, sets it up to go test this gap down it did over here. It may find resistance at 400 and 404 area and 436 area and pull back before we can get all the way up there to fill that gap. It's on a path to fill that gap, probably out to the summer. Lots of stuff looks pretty bullish out to the summer. I'm not gonna lie. It may take that. Pull back up that seasonality chart I was talking about on the S&P. So we may need. Come on, pop back over there. We may need that whole April move, and then we may need that July move to get up to those targets on that big tech stuff. All right. Moving on. Nope. Boot. Nope. Got to click on the chart. So far, so good. Just looks like hit the roadmap line. Final pop probably up to this 90 area. Could go as high as 97 maybe. Not likely to get a whole lot more, I don't think. Yeah, probably 97 maybe be about the limit. A higher high, any point it makes a higher high than right over here, it can be done and do a bigger retrace. So be careful that the potential for a whole lot more on boot is just not there for me. The big potential was down here on this run. And then this is, knowing when this is done is difficult. And then it can wrap up here or it can wrap up here. The upside potential is not giant, although it can extend. It's just not giant. And then it's likely to come all the way back down to the 65 area one more time. So be careful on boot. I'm not chasing it for right now. Just not trading it. MVS. November Victor Sierra. Yeah, my methods do not always work so well on biotechs. Just throwing that caution out there. And this has been kind of sideways. Looks like it has a lot of resistance built up over here. Coming across. And breaking out through those highs can take it up to possibly 96 or 100. Also turn it back down. Yeah, look at that. Look at all that crap. It rejects out of this area. I'd be very careful. Not a lot left on that one as far as upside before a violent reversal. It tends to get some violent reversals in its history. That just looks like a chart I would not mess with. I mean, it's sideways. Look, there's no trend here. It's just chopping sideways. Like, you know, sell your spread up here, sell your spread down here. Play the middle. Dangerous chart right there. All right, and HUT is going to reverse split, and I recommend, not trading advice, but I recommend that you liquidate and get out of this thing. Move on to something else. They're doing a reverse split and a merger, and it's probably going to be bearish for the price. So be careful on HUT. I don't see it going higher in the short term. Reverse splits are bearish, and mergers are a crapshoot, especially merger and acquisitions in the mining business. I don't know, crypto mining. Roll your dice, baby. Let's see what happens. So I closed all my HUT. Just put it that way. I moved over to BTBT. That has a much more positive looking chart. We break above this roadmap line. We're probably headed up into this $2 area on BTBT, and with a much larger potential to go higher. Also in here with much larger potential targets, I should say, for higher. Looking for something up here in the possible $3, $4, or even $6 area on BTBT. This is my ideal bullish target area right here. See, it has a better potential than what I had tied up in HUT. So I took my HUT stuff, liquidated it, and put it over in BTBT. All right. Any questions on that? Questions on anything else? Got down to the end of the list. I'll give you a couple seconds to throw anything else in here. Otherwise, it's been a great 30 minutes at least. I mean, it's already been almost an hour. Crazy. Time flies when you're watching charts. Anyway, thanks for coming, everybody. I'll be back live 9:15 in the morning for Morning Monster. Give you an update where we're moving for the day, give you my bias for the day. Any overnight news that comes out, we'll kind of cover it. Now, thanks, Valerie. Love you too. Thanks for being a subscriber. Thanks for being a follower. Thanks for coming and watching 30 minutes of awesome. Love you all out there. Have a great rest of your evening. Come back, see me in the morning. I'll be up on bright and early, 9:15. We'll get after this thing. All right. We'll try to hopefully the rest of the week isn't so meh like today and yesterday have been. So remember to subscribe, hit the subscribe button, hit the bell with the things, and get the notifications for when I go live at 9:15 tomorrow morning, Eastern Time. Thanks for coming, everybody. See you tomorrow.